Do you guys want to make $1 million this year? I do. Hey guys, today we're going to be going over the life of a day trader. We're going to be going over what I do, my cadences, what I do every morning when I wake up, what I look at, what technicals, what economic data, what fundamentals, everything that start my day, and and what kind of trades I make, how I trade, and how what my $1 million mindset is. Stay tuned. You guys are going to learn a lot. The first thing I like to do is I like to go over to MarketWatch, check the economic calendar. I like to look at various types of data in the morning. Kind of gives me a trend of where the market's going to go. So we had job openings, array, average. So nothing crazy. Take this with a grain of salt because I take this in correlation with other data points. So it doesn't mean one way or the other. Some other data might come up or might affect the price action. But if the data is really strong, if the deviations of the data, like ADP employment Thursday, we had a pretty nasty bloodbath on Thursday. We had ADP, we had employment up, we had jobless claims up, down, initial jobless claims. So that means the market is strong. That means the Fed's going to have to keep rates higher for longer. And then inflation data, PCI, CPI, PCE, personal consumption expenditure. So, I take a look at this and figure out what the strength of the move is going to be. When inflation data was really low, we usually have huge spikes. When it's high, when employment is high, we usually have declines like this. So, this all correlates to the next step in the process, so stay tuned. The next thing I like to look at is bond auctions. Bond auctions, 20, 30 years tend to have a significant effect on the market later on, in the day, usually between 11 and 12, 1, maybe drags on later into the days. You can check bond auctions by going to just Googling upcoming auctions, treasury auctions, and checking out when the next date is. The next auction date, as you can see, is the 11th of January, coming up next week. So something to keep an eye out. The next thing we're going to take a look at is the technicals. The technicals and the unusual options flows. I'll go through this real quick. So as you can see here, my screen is a big jumbled mess, but it's okay because there is some reasoning behind this, and I'm going to show you all the reasoning I can. So I like to use a few different technical indicators. RSI is at the bottom. Most traders use this. 14-day. It measures the overbought, oversold conditions based off of price action for a 14-day period. That's the average length, 14 days. We're going to look at the red line, the white line, and the green line at the bottom of the Bollinger Bands. The red line, I call it a red because it's the way I like it. It's these are price movements within 2 deviations. The white line is the middle of the past, like the average of the certain number of days, and the green line is the bottom. But the most important of this, I would say, is the 8-day EMA and the blue line, which would be the 25-day EMA. So how I use these is pretty much I wait for a cross. If I'm trading, if I'm making a trade for the day, I wait for the 8-day to surpass the 25-day EMA, and we go up. And then I do it on the way down too. I wait for conviction. I wait for the cross to fully happen. You don't capture the full move, but it's good for a trade. And now let's look at the next day. The next price action indicator, which would be volume. Volume, you see how we have a fairly low amount of volume here? The next thing we look at is volume. We can see that these are 5-minute increments. So there's a 5-minute chart. 1 minute is actually even better. So we can see that we had a significant amount of buying pressure over here at around close. So we'll see if this reverses. So there's a lot of people buying down at this level. We'll see how good that works out at tomorrow's trading day. But regardless, the key thing is the EMAs, the Bollingers, RSI. We did hit a low at the RSI right here. We'll see if that keeps trending downwards. Lastly, I like to take a look at the options flow. I like to take a look at the total market option flow and a irregular stock option flow. So if I see something that could possibly be like a 5-bagger, 10-bagger, 3-bagger, 2-bagger, I'm gonna go for it. Why not? So I take a look at those. So it only works for specific securities where I'm looking for unusual options flow. If there's earnings, if there's a significant amount of options flow, like for MSTR or Coin, where stocks that like rarely trade options, and in the last few months, last few weeks, you've seen dramatic, like $2 million on Coin and stuff like that. But you have to know what is unusual and what's not unusual. So that's why you have to back test and study and learn and memorize. Let me show you. So here we have unusual options from Unusual Whales. So I like to use this as a backstop, or as a supplement to my other technicals when I'm trading, when I'm day trading. I use first if I'm trading credit spreads on SPX, daily credit spreads, or sometimes one directional, I'll use this as a complement. So sometimes I'm on Thursday, this wasn't really helpful. It wasn't really showing anything. And I'll talk about this later on, so just pay attention on which data points carry more weight than the others. So yeah, see over here was really this is the out of them all the options. This is out of the money options. And what this means when it passes this line is that the calls are being bought at the ask, and they're being more bought at the ask than they are at the bid, which is pretty bullish. It was more helpful on Wednesday when we saw over here that when we saw a nice decline Wednesday, decent decline, nothing crazy, but. Yeah, but the best definitely would be price action, and I'll talk about that later on. So this is the bottom screen here. I'm looking at unusual activity, on different securities. Tesla, Nvidia, all these big securities, they have massive options flow. So I usually never go off that unless it's really huge. It's really not worth it because of the volatility on the stock. But as you can see here, you may come across a few stocks, Tesla and Nvidia. You see those are the big $1 million flows. Occasionally you come across some which are like unusual. Etsy, 450,000. That's pretty unusual. It's a small stock, market cap of 10 billion, and they have unusual for this is pretty far out. So the closer it is, the better. The better chance of if someone's betting on a close range option with a high amount of money out of the money, it's usually a stronger indication. But take it with a grain of salt. So I like to look for $1 million plus on smaller stocks, unusual stocks that usually don't trade options. Earnings are pretty good too. If you see a large order come in for a stock on earnings, usually small to mid cap or better. That's how I use the unusual options flow to supplement my trading. And we'll talk about the weights in a little bit. So stay tuned. When I talk about the weights, I'm talking about the weight that you put behind each specific data point. So that's where where the uniqueness comes in the trading style. You have to figure out how much weight, what's worth what, and you can only get that from watching the markets year after year after year and know what's worth where to come in, and where the market's going and such. So price action I'd probably weight that a little bit higher than the rest. But the economic data is, the economic data I probably weight before price action. But price action is it's key. And unusual options activity is definitely up there after that. If you have everything aligning in the same way, options activity, economic data, price option, then you have like a grand slam. That's what you want to be looking at. So that's the most important. And you can really, honestly, you really have to learn this by either watching the markets or learning from someone that actually knows what they're doing, and or reading a lot of books and learning by yourself. And that could take a long time. And whatever is best for you, it's definitely worth it. I'm not saying everyone needs a course, but reading and learning about how the markets react, it's definitely like a full-time job. And you really you have to watch, put your money in, learn. Sometimes you make mistakes, and then you go back to hit the books harder, learn how the data points work, and that's it. So I'm happy I found my group. I was able to, I formed my group, and I invited some of the best traders I could find over years and years and years. So full-time traders, we have Wall Street guys in here, we have software guys, IT guys, all different kinds, robot engineers, software engineers, like the smartest people on the planet. So it's nice to learn from people that are very smart, very data oriented. If you guys are looking for a group, you guys want to join, we're gonna cap this group at 1,000 members. We're almost at 500. So if you guys want to join, I'll leave the information down below or in my bio. Take a look at my other socials if you like, my Twitter, my TikTok. Let me know what you guys want for the next video. Stay tuned, and thanks for watching. Like, subscribe, comment, follow. Thank you guys.